So the market is basically flat today, as you can see, but it is down a good bit over the last week, week and a half or so. And we're still, I mean, I would consider it, we're still at all-time highs. It has come back, the Nasdaq at least has come back to where it was actually just before it fell in last August. So it's kind of like we're gonna, if we buy now, it's like this is the Nasdaq, the S&P also is a little bit higher. Um, but it has pulled back a little bit. So we're kind of at levels that it was back in November of last year. Um, and also, more importantly, the VIX has popped a little bit over the last week from a level of around 16, and now it's around 18, 19. And if we zoom out, it's also, yeah, you can see it's a little bit elevated. Again, not super high. In August, we got VIX all the way up at 26, 25, 24. But it is a good time to take advantage. We are underinvested. So we're invested. We have 89,000 cash available out of a $100,000 portfolio. So we're only about 10% invested. So I wanted to take advantage of this small pullback to open another position or two. And then, so what we hold are short puts on Apple, Google, NVDA, PayPal, um, all about 3,000, between $2,000 and $4,000 positions, short puts, all for around $1,000 credit. And we're slightly down on each of these positions, um, but each of the positions is on track to make full profit. So Apple, as long as it stays, these are short 200 puts, as long as Apple stays above 200, we will make the full $979 um, on expiration, which is in another 2 years. Same with Google. Google is trading at 170, but as long as it stays above 150, we're down $500 on paper losses. But we are on track to make the full $1,000. And then same with NVIDIA, it's trading at 120 as long as it stays above 100. And then PayPal is close to the money, but it's still out of the money. So we're down $500. We're down about 50% again, 50% on two of these, almost 50% because Google and PayPal have pulled back a bit. But we are on track to make our full original profit of $1,000. And you can see, yeah, PayPal has come down a little bit over the last, I mean, yeah, since we opened the position. I don't know if we started it, if we opened the PayPal position here or down here, maybe down here it was, but either way, it's come down around $10, which is over 10%. So we did lose a bit of money, but it's all, like I said, it's all paper losses, and the positions are on track to make their full original profit. So one glaring omission from this portfolio when you're looking at tech stocks is Amazon, because we got Apple, Google, NVIDIA, PayPal. So Amazon is definitely missing. And as you can see, this is the graphic of the last 9 months of Amazon. It is down from highs of around 240. So it's down to around 210. So it's $30 down, which is over 10%. So it's down $40. It's down $30 on a $240 stock. So it's over 10% down. And as you can see, it's below these moving averages. This is, I think, the 20-day or the 50-day, and this is the 100-day. The longer, the 200-day, it's still below, is still below it. And this is kind of like technical indicators say that this is like a death cross or whatever. I don't buy it. When I see a stock which is trading in a channel and it reaches the bottom of the channel, also the RSI is, let's see what the RSI is 33, so showing that it is slightly oversold a little bit, maybe potentially. But either way, so it's trading at 210. So let's see what we can do. So we can sell Amazon, and then we'll do a short put, and let's do a 1 year position. We can sell it, and let's make it into a put. And let's see, I want to get around $1,000. So what'll someone give me around $1,000? So this will give me $1,000 in the year. So as with Amazon trading at 210, another 10% below 210 is 190. So these are 180, and they're going to pay us. These are 185s. Let's say 185s, and we'll get $11 for this. And if we sell this, 11.2, so we're going to get 1120, and this is going to cost us $3,000 in buying requirement, and margin requirement. And then as far as the statistics go, the probability of any profit, the break-even price is obviously 173, so it's 185 minus around 10. So 185 minus around 10, so it's 175. And the probability of this, of any profit, is given here at 75%. So it's a high probability position, um, a high probability trade. Um, let's go ahead and do it. It's not rocket science. We've done this. It's just a short put. So let's go ahead and have that fill. On these paper trading accounts, it won't fill at a mid price, even though really I can hopefully probably get it fill for a mid price. You really need to do the call, the ask. So there it goes, 1120. We got 1,125 for it. And assuming Amazon stays above $185, which is 10%, it's more than 10% below where it is today, we'll make full profit on this position. So we just added another $1,100 of potential profits. Um, and overall, our portfolio value is 98,600. So we are down $1,500 around. But if we do look at the portfolio performance, so this is correct as of Friday of last week or of last weekend. So our portfolio is down a little bit, but the Nasdaq actually is down even more now, and the S&P is down. They're both down for the year. We're all three of us are down for the year, with the net with us slightly outperforming the S&P, but again, it's insignificant. With in 1 or 2 months, like it's 2 months of 2 full months have passed actually, but yeah, it's like an insignificant amount of outperformance or underperformance. Really, for these positions to make money, you really do need to let time go by. And like I said, we had the potential to make 4,000. Now we'll have the potential to make 5,000 because we added $1,000. And all of the positions, despite the $1,500 of paper losses, $1,300 of paper losses, they are all on track to make their full original profit. So right now, every one of our 5 positions are on track to make the full profits. And if they ever do, so PayPal is getting close to the money. Although if we look at PayPal again, um, it's trading now below its 200-day moving average, and it's pulled back a good amount. So our entry point now is $70. So it's like we're buying it. We've basically gained 6 months of time by selling at $70, and it could go down to where it was here to 60 or 55. And if that does happen, then we could roll this down. It would be very easy to roll this down. Um, and increase our position. So let's say if we roll it down, we could roll our 270 our 270 puts to 60 puts, and that'll be a $3 credit. But I can roll it to a $3 debit, but I can roll it to, let's say, 60 puts, and that'll be a net credit of $700. And that, instead of having a $4,000 investment, it's going to increase our margin requirement by another $3,000. It'll probably require more than that, but either way, we're going down $10 in strike, and we're adding $700, and the time frame is the exact same, so it's still a January call. It's still January puts. So if PayPal does start going below 70, below 65, let's say, for example, maybe it would be a good time to roll it. And then the idea of opening these small open entry positions, is that it enables us to double down and double down and double down. So this position, for example, gets a 79% probability of making money. So again, this is how your house, not the house, not the gambler. You open these high probability positions of making money, and then when they go against you, you roll them down into higher probability positions, because there's obviously a higher probability that PayPal will be above 60 than it'll be above 70. Um, and then to make more money. So our original credit was $1,000, and now we're getting $1,700 credit. Um, so instead of making $1,000 with PayPal above 70, we'll make $1,700 with PayPal above 60. So that's obviously like a higher probability position, and it makes more money. So that would be the adjustment on PayPal. And then what I did on PayPal, we can do the exact same thing on any of the other positions we own. Not that any of them need it. So Apple right now is trading at 240, and our short puts are $200 puts. The only one that's really close, yeah, none of them are really close. So all the others, PayPal is the only one that really is close to needing adjustment, or it could be adjusted. All the rest are totally on track to make their full profits. Um, so yeah, this is PayPal, and then we can let's see if do it. So we added $4,000 of margin requirement, but let's see if we can find some other. Um, let's see if there are some other uh, companies we would like to open. Meta. I mean, we could do Meta. Let's see what Meta looks like. The thing is, Meta is it's a very high strike price. So Meta is trading at $600. So the margin requirements for a short Meta put, will be a lot. But all right. So let's do Meta. We don't have Meta. I like Meta. Meta, the RSI of Meta, it's okay. It's $46, but this is a paper trading account, and we're using this for educational purposes. And the reason I want to do a bull call spread on Meta, beyond the educational opportunity, is because short puts on Meta will have a large margin requirement. Um, whereas what's happening here? And then the reason I want to do a bull call spread on Meta beyond the learning opportunity, is because a short put on Meta will have a large margin requirement. So let's say, if we sell Meta is trading at 660, if we sell a $600 put, our cash buying power right now is 86,000 dollars. And if I were to sell a put, then the resulting cash buying power is gonna be 72,000. So we're talking about a $13,000 investment, whereas the rest of my investments are around like 4,000, 3,000, $4,000 margin requirement. And the reason for that is because I'm promising to buy 100 shares at $600. So 100 shares at $600 is $60,000. And then the margin requirement, I guess, on Meta is around 25%. So they require you to hold 25% of that, um, against holding the shares. But a call spread, I can open a vertical call spread of whatever size that I want. So with Meta trading at 665, let's see. So it's trading at around 660, and it seems like it has a good support around the 650 line, and it's down from 730. So it seems perfectly reasonable that over the next 2 months, it could go back up above 670. Um, so we can open a bull call spread. We can do a 660, 670 bull call spread, and it's straddling the money. And that will cost, let's go a little bit higher. But basically, a bull call spread straddling the money costs about half of the strike width. So this is a $10 strike, and it costs about $5. So it's basically you pay $5 to make $5. Um, and I did a June expiration, which is 3 months away. We're now in March, April, May, June, mid-June. So it's a 3.5 month expiration, and then it's a 100% gain. So it's a $500 investment, 515, and we will have the potential to make $500. So it's basically 5 to 5 or 4.85, whatever. So it's basically a 100% gain if Meta goes above 670. And Meta, well, 670, like a $10 spread is nothing for a $600 share, right? So it's not a big deal. It could easily go above 660, 670. But the point is, as long as Meta goes above 670, um, this will be a $10 valued position. So from $5, we're going to make $5. And then the probability of this is 50%, which makes sense. I mean, it's a crapshoot. Right now it's basically trading in the middle of between these two strikes. So it's a 50-50 chance. Maybe it'll be higher, maybe it'll be lower. So that's the probability of success, basically 50. But then the idea is that if Meta over the next 2 months doesn't go up above 670 and rather goes down towards 600, then it's only a $500 investment. But it's a very easy roll to go down from where it is. So if Meta goes down towards $600, I can close this position, and I can roll it down to say a $600, let's say a 600 to a 620 bull call spread. And then basically and that'll cost around another $5, $5 to $6. But now we paid original five, and then we rolled for another 5 or 6, so we paid $11 to $12, call it, for a $20 spread. So we still have the opportunity to make 8 divided by 12. So 8 divided by 12. So we still have the opportunity to make 66%, but this time at a lower strike, at a $620 strike. Um, so let's open this position, the first one. It'll be a $5. It'll be 550 around. Debit for the potential to make 460. Um, and that'll be it's a like I said, it's a small position, but again, the idea is to be able to adjust it. So more importantly than making money when you more importantly than where the stock goes after you open your position is how you would adjust if it goes the other way. Um, so we have a very concrete plan about what to do, and generally, up till now, the positions have all been short puts. So now we're taking the opportunity, and the short puts have paid us around between paid us about. We tried to get about $1,000 in a time frame of between 1 and 2 years. So the NVDA, PayPal, Amazon were 1 year positions, and then the Google and Apple were short put 2 year positions. But they both paid us $1,000. So the Meta, it's only and those required around between three to $4,000 in margin to make that $1,000. Um, but um, but this position, it's a bull call spread. It's only a $500 investment. Our max loss is $500, but it will make $500 if Meta goes up $4 from where it is and stays up over the next 3.5 months. Um, and and then and then if we sell three of those in a year or four of those in a year and we're successful every time, we'll make another between $1,000 and $2,000 if those go our way. If they don't go our way, then like I said, we'll roll these down and make it into, instead of a $500 investment, it'll be $1,000 or $1,500 or a $2,000 investment, where we'll make, again, it's close to a 1-to-1 or a 1-to-2, or like a 2-to-1 or a 3-to-1. So you'll make anywhere between 100%, between 150%. So if we have to roll it down to pay, I don't know, call it $3,000 on a $4,000 position, then it's for a $1,000 max gain. Then we have the potential to make $1,000 on a $3,000 investment, so it's a 33% return. And even a 33% return over three to 4 months is a great return. Even a 30% return on a full year is a great return. And what we're doing right now is we're just building our portfolio. So it's $100,000 portfolio, and we want to make $10,000 a year on that. So currently we have the potential to make we had the potential to make 4,000, and we just added another $1,500 potential. So we have the potential to make 5,500 over the next year or two, kind of, and it depends. But over time, we'll build this until we can make a potential of $10,000. So that was a lot of numbers, but let's go ahead and update this table to see where we are. So we just added 1,500 of potential gains around. So that puts us at 5,500 potential. And then the portfolio is 97,961, 97,961. And then let's just update the values of the indices. So the S&P is at 5868, 5868, and then NASDAQ is at 2526. It's at 2526. All right, so everything went down, but as we saw, all of our positions are on track to make their full profits, whereas the other indices will need to go up. And we're actually on the 4th of March. Oh no, well, yeah, we recorded this on the 3rd, really the 3rd. So yeah. So we recorded this on the 3rd, and then according to as you can see in the graph, um, the Nasdaq is already like way down compared to where we are. It's down almost 5% on the year. Yeah, 4.5%. The S&P is down 2%, is down 1.8%. Our portfolio is down 2%. But again, we are on track uh, to make the full $5,000 that we were originally going to make, assuming the markets stay where they are and don't go down anymore. If they go down more, then obviously we'll adjust accordingly. Um, but yeah. So that's the update to that's the third update to our portfolio. We have one, two, three, four, five, six. We now have six positions which we opened from the beginning of the year, and our performance is slightly bad. So we're down 1,800 on the year out of 2,000, so 1.8% on out of 10,000. So we're down about 1.8%. But like we just saw, all of our positions are on track to make full profits, except for the new ones. Obviously, today Meta isn't currently on track to make full profits, but it only needs to go up $15 from where it is. Um, yeah, so let me know if you liked this format of updating the portfolio, because I would love to get feedback, versus just putting a blog post um, with updates and screenshots of the trades that I actually made. Here you can actually see the trades that I made in real time, and I build them uh, in live time. Um, yeah, so hopefully we'll see where the market goes from here. Maybe it'll go up, maybe it'll go down. Um, it feels like it's down a lot, but really it's only down. It's only back to where it was a couple of months ago, so in November. So it's not down a lot. And actually, but although actually it was down this low or this high in mid-July of last year, where from here it went down a good amount, from 21 to 18,000. So it went down 3,000 divided by 21. So it went down 14% over July, and then slowly has been making its way back. But yeah, let's see what happens from here, whether down or up. We're here for the long haul, so it doesn't really matter if in the next month it goes down or up, as long as we know how to adjust our positions to make more money with a higher probability of success. And that's what this portfolio is here to demonstrate. So wish us luck and catch you at the next update, which will be probably in the next 2 to 4 weeks.